Should you forbear on paying your mortgage? With the coronavirus, it's crazy. And the government is saying, banks, you gotta help people out. Freddie, Fannie Mac, government institutions, you gotta help people out. And guess what their solution is? A forbearance, which means maybe 6 or 12 months of making stop on your payments. Is this a smart idea to pocket and save all that money, especially if you're in hardship? Or could this be the dumbest decision of your life? You have no idea how stupid of a decision that is. You might get an initial benefit up front, but you're gonna get slaughtered on the back end. Do you see all of the homes in the valley there? Do you know how many of those people are currently filing for forbearance right now? Smart? Stupid? Check it out. The definition of forbearance: the action of refraining from exercising a legal right, especially enforcing the payment of a debt. That's what Google says. So check it out. Forbearance is essentially when a bank says, all right, we want you to make your payment, but someone is leaning on us to give you some leniency like the government is doing right now. And what the government is saying is, banks, you're gonna get all these homes coming back to foreclosure unless you step in and actually create some leniency for them. So banks are saying, you know what, we'll give you 6 months. Some banks are saying, we'll give you 12 months. And then your payments are gonna resume again. By the way, you have to pay back everything you didn't pay, but we're gonna give you some leniency. So far, this sounds like a pretty good idea. Check this out. This is straight from Freddie Mac. We make homes possible. Our COVID-19 response is we're going to assist borrowers by actually doing forbearance for up to 12 months. It sounds pretty neat, right? Check this one out. This one also comes from Marketplace. Mortgage forbearance numbers up are due to COVID-19. They say that they're up to 2 million loans that people have requested in forbearance, but I'm not sure if these people actually understand what they're doing. Check this one out. This is from Kara, how to delay your mortgage payment during COVID-19's pandemic. And then this one comes from the Federal Housing Financial Agency. They're coming out here and it looks so compassionate. We're going out of our way to do this. But I'm about to show you why forbearance might end up being the dumbest decision that you make financially this year. There's a lot of people telling you that you should forbear and that you should pocket the money. Even Meet Kevin from YouTube on his channel made an entire video walking you through how he did this with one of his mortgage bankers to give you a heads up on the exact step-by-step process of initiating forbearance. What people don't understand about forbearance is that after you forbear, you will be treated different. Your credit will be treated different. You will no longer have the credit worthiness that got you into that house or home, townhome, whatever it is, in the first place. In 2008, we had the subprime bubble pop, and it was total financial crisis. There was blood in the streets in the stock market. Real estate had seen its biggest crash since the Great Depression, and it was cataclysmic. For me and other investors that knew what we were doing, it was actually the best of times, much like investing in real estate right now is. Back when the 2008 bubble burst, however, people were not able to make their house payments, and there were so many foreclosures that were happening that banks said, we'll do a forbearance. Even on my home that I came from, my bank called me up and literally said, we'd like to restructure your loan. Here's the paperwork. And I said, I didn't even ask for it. They were so worried about a house that big with that much mortgage going back to the bank that they dropped my payment in half. And I got to enjoy that for a decade. I didn't have to do anything to qualify for it, but it was not a forbearance. Here's what forbearance actually does. It reflects on your credit like a bankruptcy, which means that your credit is going to be so tarnished for likely 7 to 10 years that you're actually not going to be able to use your credit to get that next car or downsize, move into a smaller house or upgrade into a bigger house or buy an investment property. Your credit is going to get hammered by a forbearance. And you need to weigh that out and ask, what is the value of my credit? Now, I will be the first to tell you that I'm always finding credit workarounds. In fact, I buy homes most every single day, and I never use my own money and I never use my own credit. And I actually teach people how to do that. You can click any of my links below found in any of my videos, and I will show you how to be a super successful investor, especially right now during COVID-19. It's like seriously the best of times. So there's always a workaround, but it requires a high degree of creativity. You've got to bring a deal to the table where there's going to be money where someone else would say, I have like an interest in wanting to put up my credit because I'll pay someone for their credit. They'll come into the deal and now all of a sudden, voila, I'm actually out doing another real estate deal. But for most people, that is not ideal. If their credit goes down, your purchase options are going to go down substantially. Is there a chance that the structure of forbearance will reflect differently on your credit because of COVID-19? Yeah, there's a chance there could be a policy change and that it won't reflect negatively on your credit. But right now, no one is saying as much. And so right now, if we default to the established precedent, it's going to hurt your credit. So should you forbear? Well, let's do the math and actually place a value on your credit. If you have a $1,000 a month mortgage and the bank's willing to forbear for a year, then technically you could actually save $12,000. Now, it is still $12,000 you're going to have to pay to the bank later down the road. Some people are saying you might even have to lump sum pay it all up front, so you should look into the terms with your bank. But let's just say for all intents and purposes that you get to save $12,000 that you don't have to put out right now. If you've lost your job, that could be a godsend. If you're in a bad financial situation, that could actually be really helpful and useful. But I want you to understand that saving that $12,000 right now is going to reflect on your credit as something akin to a bankruptcy, which means that for years to come, your credit's going to be in bad shape and your credit score may not go down, but banks actually lending to you, banks actually letting you get a loan on a car or a next house, it's going to be a no answer. And you're going to wonder why, and that forbearance is going to last there for a number of years, likely 7. So you have to ask yourself, what do I value more, my money or my credit, and at what price point? In that example, $12,000. You might be willing to ruin your credit over $12,000, or you might have plans for 1 or 2, 3 years down the road once coronavirus has corrected itself and say, I need that credit. Part of being a financial genius is knowing all of your options and then making good calculated decisions. Some risks are worth it, some are not. I hope you enjoyed today's video on forbearance. This is a message that isn't out there, and if you think other people need to know about it, then I want you to share this video. Thanks again for watching. Make sure that you subscribe, and we will see you tomorrow.